Hey everybody, it's Joanne Muse of the Tax Lien Lady, and this is Ask the Tax Lien Lady Live, where you get your questions answered about investing in tax liens or tax deeds, or if you if you want to get started, I can help you there. But if you're already an investor, if you're already investing in tax liens and tax deeds, and you're not experiencing the profit that you thought you would, I can also help you with that. So whatever your questions are, let me know what state you're from or what state you're investing in. Say hello when you get here so that I know you're here. And let me know what state you're from or what state you're investing in. And the reason for that is it is so different in every state. Anybody who tells you they're an expert everywhere in the country is probably not being totally honest with you. All right. I myself am not an expert in every state. Okay. But if you tell me what state you're investing in, I do have a lot of experience in a lot of states. And quite frankly, there are some states that really aren't worth investing in unless you actually live there. And even then, they might not be worth it. States like Oregon, for example, is a deed state, but they don't start the bidding at back taxes. They start at either the assessed value or a percentage of the assessed value. Another state that does that is Minnesota. So these states are not good states for buying tax deeds. And there are some states that just don't have laws that favor the investor. Like in most states, when you buy a tax deed, the other liens go away. Well, there are a couple of states that don't do that. So as I said before, there are a couple of states that are not really great for the investor. So those are not states that I'm an expert in, because I really don't bother with those states, okay? So let me know, say hello, so that I know you're here. Let me know what state you're from or what state you're investing in, and give me your questions. I'm here. Today is Ask the Tax Lien Lady Live. I'm here just to answer your questions. And I do apologize for the reflection of the light that's in the picture behind me. Okay, hello, Jean. Good to see you. Hey, Eugene. Good to see you. Good to see you. Okay, so what are your questions for me? What questions do you have for me? Wisconsin, by the way, is a state that has liens. They do, no, I'm sorry, deeds. They do tax deeds in Wisconsin, and they are online. Some counties have online deed sales in Wisconsin. They don't have much available, though. It's not uncommon for a county to only have a couple of properties in their tax deed sale. Hi, Shelley. Hi, Deva from New York. New York is one of my favorite states, but I will tell you, New York is a different animal. Most counties are deed counties. So, Deva, let me know, where in New York are you? Because different things go on in different places in New York. Most counties sell deeds, but and Nassau County has a big lien sale every year, but I don't like that sale. I've never been to it. It is super competitive and it gets bid down very low. But the villages in Nassau County can also have their own tax lien sales. And villages and cities in other counties can make their own rules and have their own sales. And I've actually been to a couple of tax lien sales in a county in New York that sells deeds, but the cities can do what they want and they sell liens. Okay, in the city, if you're in New York City, you're kind of out of luck, because they do sell liens in the 5 boroughs, but only to big fund companies. They bundle everything up. Each borough will bundle everything up and sell them, for millions or billions of dollars to big fund companies. And then later on, the fund companies can sell them, but it's something that I don't get involved in, what happens in the city. They're also trying to do away with the tax sales in the city. Okay, Eugene is interested in Ohio, Indiana, and Minnesota. I mentioned earlier, Eugene, I don't know if you were on here when I started, that Minnesota does sell deeds, but it's not a good state to invest in because they don't sell at back taxes. They sell at either the assessed value of the property or a percentage of the assessed value of the property. So unless you live there in Minnesota, it's not a good place to go. Indiana is a good, they're going on now, by the way. Now is a good time to get into the Indiana tax sales. They are going on now, and Indiana is one of my favorite tax lien states. And here's the reason why. Because you get your interest or your penalty on everything that you bid in Indiana, okay? So it doesn't, in some states, they bid premium, they bid up the price of the lien, right? But in some states that do that, it effectively lowers your rate of return. Not in Indiana, okay? Because you get your interest or your penalty. In Indiana, it's a penalty that you get on everything that you bid. Ohio is not a good state, and that's because in Ohio, I will tell you the truth. Ohio is one of the states I don't really know enough about, and not because I haven't looked into it. I've talked to experts in Ohio, and I've got contrasting information, right? I've talked to one attorney who tells me it's a lien state, and that the only way for, they do deed sales, but the only way for a lien to go into a deed sale is after it's ready to foreclose, after the redemption period's over. But even the counties that do have lien sales, they bundle everything up in big bundles and only sell it to fund companies. And then when they do have deed sales, there's sometimes only a couple of properties in the deed sale. So unless you live in Ohio, I wouldn't bother looking into it, just because, like I said, from different experts, I've gotten different information and they contradict each other. Like one tells me it's a lien state and the other tells me it's a deed state. So what is true? I don't know. Here's what I think is true. That they do sell liens and it is a lien state, but they only bundle them up and sell them to big fund companies. And that when the redemption period is over, those liens go into a deed sale. And that's why there's not a lot available in their deed sales. Okay, let's see. We've got a couple of questions coming in here now. Jean is asking, when you're buying tax deeds, is it better to get a quitclaim or warranty deed? Oh, thank you for answering that question again, Jean. She had asked that in one of our tax lien investing tips broadcasts that we do, live streams here on this page, my business page on Facebook. We're doing them this week at 9:30 in the morning. So tomorrow morning at 9:30, Thursday morning at 9:30, I will be here giving a very short training on some aspect of tax lien investing. But today, here at 2 o'clock on Tuesdays, we do Ask the Tax Lien Lady live. And Jean had asked me that question, and I told her to bring it up today. It's always better if you could get a warranty deed, and you don't always get one. Most tax deed sales do not give you a warranty deed, so you will have to clear the title to the property. And that is so that you could get title insurance. Okay, and that's just warrantying the title of the property. So in a lot of these tax deed sales, you get the property free and clear of any encumbrances, right? But you don't get a warranty deed, a warranty title. They don't guarantee the title of the property. They just give you a tax title, or it's equivalent to a quit claim title. Okay. So that was her question. And yes, it's always better to get a warranty deed, but you don't often get one in tax deed sales. A lot of states will do not give a warranty deed at a tax deed sale. Okay, let's see, we've got more questions in here. Can we always easily see what the other liens are on the properties, IRS, government, etc.? Not always. What the thing to do is to search the owner's name of the property in the public records, and then you'll see what other liens are on the property. But sometimes there might be current liens that haven't been registered yet, and any government liens will stay on the property. You know, any local government liens, like if there are, you know, sewer or water charges, and, you know, any local government liens or current taxes, because you're buying, it's in there for last year's taxes, but there's current taxes due. And some states will forego those current taxes for you, some won't, and you'll have to pay them. Okay, let's see. Yeah, hi Ray, good to see you again. And now you're back in San Antonio, Texas. Oh, are you going to be going to the tax sales in Texas on Tuesday? Yeah, Jean, Michigan does give a quick claim deed, most states do. And can you sell it as it is without a warranty deed? Yes, you can, but not to somebody that's going to get a mortgage. The reason being the mortgage company is going to want title insurance. So you're going to need to be able to have title insurance. So the first thing that you do is clear the title. That does not give you title insurance, but it makes it so that you can get title insurance. Now you could wholesale the property to another investor and just let them know that they are going to have to clear the title. So you're not going to be able to get retail price for your property unless you clear. And it's probably only going to cost a couple $1,000s to clear the title. And then you have to pay for title insurance. Hi, Shelley. Let's see what your question is. Not directly related to tax liens, but or not directly a tax lien question, but related. Yes, I'm not a tax expert. I am not a CPA, but do you file your tax lien business as a Schedule C or just report the interest you earn on Schedule B? If I only bought tax lien certificates paying interest, I haven't foreclosed on any properties. You would report it on a Schedule B. My tax lien business and what I make from tax lien investing are two different things. Okay, this, my business of teaching people how to invest, that's my tax lien business. Okay, for that, I do a Schedule C. But let's say my business invests in tax liens, they're going to get 1099 and they're going to report the interest that they made. And just like me personally, if I do it in my personal name, I'm going to get a 1099 and I'm going to report the interest that I made on a Schedule B. Okay, hi Glennis, glad you made it. How does a small investor get in on the bulk deals that the fund manager gets? You don't get in on those bulk deals unless you have enough money to join the fund. There are funds that you could join. I myself am a fund manager of a new fund, but private funds usually require a big investment. So the fund that I'm a manager of, you have to be an accredited investor and you have to invest, the minimum is $100,000. Okay. There are other private funds with lower minimums, maybe 50,000, but you need a lot of money for those funds. So how does a small investor get into a big fund? They don't. And how do they get in on the bulk deals? They don't. Even the fund that I'm a manager of, we don't go into those bulk deals. You've got to be a really big fund for that. You know, some of those things are millions or billions of dollars. So the way to get in, if you're a small investor, is to do it yourself. And that's what I help people do. That's what I teach people to do. And I did open up the membership, by the way. I have a tool that gives you access to what tax sales are coming up all around the country and lets you see the properties in the sale. It lets you filter the list and see the properties in the sale. My members to the Tax Lien Profits Accelerator, they also get all of my training that I do, all of the workshops that I do. And a lot of my courses. They get a lot of training. They get wealth building webinars. I do a webinar every month on one aspect of wealth building, and a few of these webinars are on tax lien investing or tax deed investing. And all that for $165 a month, or you could save over almost $500 by doing it for the year for $14.95 a year. Okay, so it's under $1,500 for the whole year. And you get access to all that. So that is a good way to start for small investors to start. And yeah, there is stuff left for small investors. Another way for small investors to start is with my coaching. I do coaching now. A lot of other companies that do this charge $20,000 to $30,000 for coaching. I do a whole year of coaching with my clients for less than $5,000. Okay, and it gives them access to everything the members get, plus they get coaching from me a couple times a month. And my members get 15 property reports a month to help them do their due diligence on tax sale properties. Coaching clients get 50. So if you're serious about investing in tax liens or tax deeds, you can have a session with me, a free 30-minute a conversation with me. I call them profit planning sessions, and see if coaching is right for you. So Nicole, and thank you, Nicole. Nicole has put in the comments for you the link for the membership. Membership was closed. It's been closed since like June or July. I think it was closed for July and August, but I'm opening it up just for a short time so that people that want to get in on the fall tax sales can have access to the membership. But then it will be only available to my coaching clients after that, okay? And Nicole has also put a link in there for you to get a session with me if you're interested in coaching, to get a 30-minute session with me. Oh, actually, she put a link in there for the coaching that tells you about the coaching, how the coaching works. But Nicole, could you also put a link in that people can schedule a profit planning session with me? Yeah, so the next link that she puts in will be for that. All right, thank you, Nicole. Yeah, that's a long, ugly link, guys. So she put that one in for you. All right, so you are welcome, Glennis, and I hope I'm pronouncing your name right. Okay. And what other questions do we have? I think I answered all the ones that we got so far. Any more questions? Ray, okay. Thank you, Ray. Yeah, and yeah, the other, a lot of the other so-called experts out there want a lot of money for coaching. How come nobody at the county will talk to you in Arizona? I don't know, Glennis. It's not their job. Here's the thing. They're not supposed to give you legal advice. So what question are you asking them? You have to ask the right questions to the right people to get the answers, okay? Oh, wow, 65K for coaching? Wow. See, here's what I don't understand. If they're charging that much money, they should be doing the investing for you. Right? They should be, yeah. That's for their advanced classes. Whew. Well, when you do I'll tell you what, when you just do my membership, you get all my workshops and they are advanced. Has anybody here been in my workshops? Anybody that's in here been in my workshops can tell people about them. Jean, were you in my last workshop? Yeah, but anyway, so no, but you've been in others. And so how advanced are they? How advanced are my workshops? And by the way, yeah, thank you, Jean. By the way, they get more uh, specific as I do them, they get better. Because I did my first workshop, it was only a 1-day workshop. Then I expanded it to 2 days. Now it's a 3-day workshop. So you get 3 days of training. And it's only like a couple of hours each day or an hour and a half each day. And that's because I don't want to give you information overload, and I want you to have time to actually do the work. So that's the whole idea of the trainings that I do, these workshops. Oh, thank you, Jean. Hi, Sonia. With 5K or 10K, is it best to invest in tax liens or tax deeds? Definitely liens. That is not enough money for deeds. What state are you in, Sonia? Yeah, and Ray reiterated what I said to Glennis about Arizona. Asking, they cannot give you legal advice, and it's not their job to answer any legal questions about tax sales. There's only certain questions you can ask them that they'll answer for you. Okay, and you have to get to the right person. So, Glennis, what question were you asking? Um, okay. I think I answered all the questions here, but we haven't even spent 30 minutes yet. So I went through them really fast. You guys got more questions, I'm here. Which states are best for tax liens? Sonia, what state are you in? You got to answer my question first. What state are you in? Okay, Glennis said, oh, New York. I've got secret tax lien sales up my sleeve. They're for coaching clients only, and me. But I would go to New Jersey, is close to New York, and it's kind of tough. You're going to have to find the right sales in New Jersey because it is competitive. But a good time to go to New Jersey is December. It's the biggest month of the year. And the end of the year, some of these funds, believe it or not, they run out of money. And if there's a few sales on one day, here's what I do with my coaching clients. I teach them how to pick the right sales to go to, number one, and then the right properties to invest in that aren't going to be as competitive. So that's what I do with my coaching clients. All right, so Glennis says, I was looking at their GIS map and had questions about that. That is, and who were you asking about those questions? You can't ask in the tax office questions about the GIS map. That is, a question for the assessor. And depending on what your questions were, that might not even be the right question. Okay. You might have to like go to the assessor's office if you have questions about that. Yeah, and Ray says it's like that nationwide with government employees. They are very cautious about their jobs. Yeah, they can't give you legal advice. And you know, when you go to the GIS website, it says right on there, there's a disclaimer right on there that it might not be accurate. And they're not responsible if it's not. But the best way to get answered, if you're Glennis, are you in Arizona and can you go to the assessor's office? That's the best way if you can to get your questions answered. Go to the assessor's office and use their computers to look stuff up. And yeah, they can help you with that in the assessors, but do not ask the tax collector questions about that. They're not going to answer that. Okay. Would Pennsylvania be better than New Jersey? It depends, Ray. What are you after? What are you after? Depends on your goals. Pennsylvania is a deed state. New Jersey is a lien state. Different animal, right? Different animal. If you want the property, Pennsylvania is better. If you want the return on your money, New Jersey's better. Does that answer your question, Ray? They're both going to be competitive. But if you want a less competitive area, go far away from the big cities. Go to Western PA, right? You want to be far from Philly and far from New York. And in New Jersey, go to remote areas in New Jersey. The less popular areas. Also, you got a single tax sales that don't have any big liens if you want to stay away from the big boys. All right. Okay, so Jean's asking about Montgomery County, PA. What about it? What about it, Jean? Oh, so you're talking about the lady from New York. You thought New Jersey would be more competitive, and I agree, go for the big city, but there are remote areas in New Jersey, LO. Yeah, there are. They don't call it the Garden State for nothing. South Jersey is the top producer of, I think, blueberries and something else. A couple of things South Jersey is the top producer of. A lot of farms down in South Jersey yet. But the problem with, see, they're two different animals. New Jersey and Pennsylvania. Pennsylvania is deeds, and you need more money for deeds. You can play in New Jersey if you only go to the live sales with less money. But you got to only go to the live sales, and you've got to target the out-of-the-way places. And maybe land. Davis says you can't. Is anybody else having trouble hearing me? Anybody else having trouble hearing? Jean, I still don't understand what you were saying because Montgomery is not that far west, not far enough west. No, Montgomery, you've got some pretty ritzy areas in Montgomery, so you're not going to get good deals in Montgomery. Actually, I did research in Montgomery for somebody that was going to an upset sale. No, a judicial sale. I'm sorry. And he wanted me to do the due diligence for him. And I did due diligence on 20 properties. And all those properties were sold before the sale. I mean, not sold, redeemed. They were all redeemed before the sale. So none of the properties I did due diligence on that he paid me for were left in that Montgomery sale, because property values in Montgomery are just too high. People are not going to let their properties go for back taxes. Yeah, okay, yeah, Ray, you like land, then that's good, because you could do better. You could buy it cheaper with less competition in a state like Pennsylvania, and you could get better rates with less competition in a state like New Jersey. Yeah. Okay, Diva's going to leave and come back. You should not need headphones. Yeah, you should not need headphones. I do better without them. Oh, and Sonia says, try clicking on the sound icon on and off. Yeah, I think she means your audio icon on your computer, but you can also adjust your volume on your computer. You can also adjust your volume. I don't know if there's any other place to adjust your volume for this, but yeah, I don't think anybody else is having that problem. Oh, and now you can hear. Okay, so it was something with your computer. Who knows what it was, right? All right. So any other questions for me before we wrap up this? And tomorrow morning, 9:30 a.m. Eastern, 6:30 a.m. Pacific for you guys on the West Coast, I'll be doing another training. And I will be doing it again on Thursday morning at 9:30. These are short trainings. They're between 15 and 30 minutes. 30, and actually none of them have been 30 minutes so far. Usually between 15 and 20 minutes. Okay. Oh, Ray, I'm glad you liked today's session. You're considering New Jersey, Pennsylvania, and New York. Okay. Eugene, you're welcome. How much is my training? Ray, are you talking about coaching or membership? Here's what I would suggest. Nicole had put some links in where you could check out the membership and the coaching. And if you're not sure what is right for you, you could schedule a session to talk to me. So there were 3 links that Nicole put in earlier. I'll have her put them in again for you. And you're welcome, Shelley. Oh, the best, Glennis is asking about the best entity to set up. You don't need an entity. If you're investing in tax liens, you don't need an entity. If you're buying property, if you're buying tax deeds, you can set up an entity. I am not a CPA. I'm not an attorney. And I think that you could always, sometimes it's best to do it in your name and then transfer it to a legal entity. It's best to own property, I think, in a trust, but for tax liens, sometimes it's just easier to invest in your own name. because let's say you have an LLC. Now, I'm in Pennsylvania. I have a Pennsylvania LLC, but any other state that I go to, they can request that I have to pay to have my LLC registered in their state to do business in their state in order to be in the tax sale. And that is the case with Indiana. If you're investing in Indiana, it's best to do it in your own name. If you have to do it in an entity name, register ahead of time, because you're going to have to register your entity to do business in Indiana, and then you're going to have to certify that it doesn't owe any taxes in the county that you're investing in. Okay, so sometimes it's just easier to do in your own name. Okay. So Nicole has put some links in there. Oh, the training in the morning at 9:30. Oh, right, that's free. It's free. You were at the last one that I did at 9:30 yesterday. It's on Facebook. But Nicole did put in a link for the membership and for the coaching. So the first link that she put in, the longer link is for the coaching, and the short link, taxlienlady.com/membership, that will tell you about the membership. And by the way, I've only opened it up again for a short time. It's going to close again. I'm not sure how long I'm going to leave it open for. Actually, I just opened it up for people that were in the workshop that I had at the beginning of the month. And I gave them a special offer because they paid for the workshop, but that ends tomorrow night. So I might also take the membership away again until I want to open it up again. But it will be open until tomorrow at midnight. Okay. So Ray's asking, rural areas in New Jersey and Pennsylvania and even upstate New York, and buy land cheap. And I am going to think about this more. Oh, well, if that's what you want to do, I recommend upstate New York. They have deed sales and many of them are online. So that's what I would recommend for you, Ray, if you want to buy the property. Yeah, New Jersey's not the right place, but PA and New York, New York, I would recommend New York State. Okay. And then Nicole has also put in that really long, ugly link. Is if you want to have a profit planning session with me and determine which would be right for you, the membership or the coaching. Or maybe if you're only interested in a specific state, maybe it's just one of my courses, okay? Yeah, and Ray, the training tomorrow is free. Yeah, it's a real short training. It's just, they're called tax lien investing tips, right? Like this page is called tax lien investing tips, okay? So I give a different tip each day I do the training. So I give a real short training. You were there yesterday, right? For the training, yesterday I talked about what states have tax sales coming up. So if anybody missed it, you could watch it, the replay here. Oh yeah, so my assistant Nicole is saying give us a thumbs up so that others can see it and get some free tips. And I'll tell you what else, if you know somebody that would benefit from this, and if this has been helpful to you, share it. Share this video on your Facebook page. Okay, share it. Yeah, give us some love. All right, everybody. I'll be here every Tuesday, 2 p.m. Eastern time, to answer your questions about investing in tax liens and tax deeds. And thank you for being here with me today. It wouldn't be any fun without you. I love answering your questions, and I'll do my best to answer them. And if I can't answer your question, I'll point you in the right direction. And thank you, Nicole, for your help. You've been a really big help. All right. Bye, everybody. Have a wonderful rest of your day.